reviews again. I think it's very important. One, it helps me check in with myself and the market, kind of pull out some ideas of where the market's headed, what's going on with the market. But all I can really do is think back on data for the week. Usually Monday, Tuesday, Wednesday gives a nice idea of what the market's doing, where it's headed. Um, and there hasn't been a lot of Momo and pennies. It hasn't been so much. Uh, it's been whipsawy somewhat, but more so it's just been failed setups, which is totally fine. A bit disappointing, but that's what happens 50% of the time. These breakouts are gonna fail. So, but yeah, really, it's been a market where you have to take the majority of your profits off at your first price target instead of trimming maybe a third or something like that, or a fifth of your account size. So today I want to go over two winners and two losers. I think it's important to look at both because all of them have relatively the same setups, but either they failed themselves or the market failed. Either way, um, as long as you have a plan and you're buying into these stocks, um, then you should be good. You should be celebrating the fact that that you followed your plan, whether it works out or not. You should be celebrating having a nice plan in place, and having all it really takes is just having good technical analysis. And of course, we're human and we make errors, and there's sometimes things that you don't see that other people saw, and that happens. And all you can really do is just, which is awesome about trading, is you can constantly make adjustments. You're constantly learning, you're constantly getting better, whether that be position sizing, your emotional state, if you're having trouble with your emotions, or technical analysis, even basic enough as technical analysis is. So, I think it's really important, first and foremost, to have a naked chart, especially when you're charting, because I don't know, for me specifically, when I have if I have anything besides the VWAP, it's very hard for me to really look at the tape and see what's going on, because if you've got three moving averages on the screen, it gets quite crowded and hard to take in the information that's happening at that very time. So let's start with a loser. Let's actually start with today's leading gapper, Rice. This just can kind of show you what this market's been like. I mean, look at this great uptrend all morning. Pre-market guys are probably loving that. But as you can see, right, like you get an insane volume candle here, you get a death candle here, and these happen quickly, and they stay these ways. So like right here, we thought it was gonna break out, and then boom, death candle. It's super whippy. So if you're gonna be playing these, you either need to adjust your either to adjust uh, your stop loss. If you have a hard stop, you're gonna have to place it further down or not trade at all, because one, market conditions are shitty, and two, if it whips down and you're not getting stopped out, it could continue lower, and then you're like, oh my god, the risk to reward's just not there. Either way, this is Rice. I traded this morning, ended up taking a loss on it. I thought I had some more juice in it, but when it's moving up like this, these tend to be the stocks that make a nice move, in the pre-market, tend to be the ones that sell off once they open. So honestly, I think it was just bad technical analysis on my part. Either way, this one comes up and opens up, finds support down here, which is where you want it to, and that might have been a nice dip buy right there. However, it's too volatile for me to get in right at open, and pops back up, continues its trend, comes down, finds support, and now it's got this lower trend line in place. And at that point, I don't even look at the daily for most of my plays, at this point, because my price target is quite literally just the previous high. A lot of the times these fail and don't make a new high, um, so it came back down to here. I mean, it was fine. You hope to see a green candle in here trying to push the price back up. right through here especially, because once you came through here you did get some support, still pushed down, but didn't get that, so I tried some off of here, and then that broke down, and then I was like, okay, and then you see VWAP, and at this point, like, if my stock breaks down once, personally, I have trouble when I get stopped out of a trade once, and then I go back and say, oh well, maybe if it holds VWAP, and then that breaks down. So I've decided that wherever my first encounter with the stock was, wherever my first trade was, that's gonna be the last one for whatever time being. That prevents me from, one, over trading, two, taking unnecessary loss, and three, because it's just good for my psyche. If you're gonna be trading a stock and you get stopped out twice, I mean, that's gonna throw you off. You're gonna be like, why doesn't this stock love me? But that's you can't do that, because then your whole system will be thrown off. So anyways, broke down. So you're like, okay, whatever. That happened. So that's basically this play. Ended up coming back up and making new highs, but it's not really creating anything that's clean, or I don't know. It didn't work with me today. So there's Rice. Now we'll move into XL. This was good. This was a good one. Multiple opportunities on this one yesterday. So it had a relatively calm pre-market, but definitely showed some volume. I'm gonna write this down actually really quick. Rice had a huge pre-market, and that usually leads to a big dip early morning, because all of those traders are looking to take profit. So do not trade stocks that have massive increase in pre-market. What is there another one that did that yesterday? IO. Did IO have a massive pre-market? Oh no, it just had been up from. Yeah, this one just simply failed. Not good volume. I mean, it had good volume. What was the other one? APDN. What are we seeing here? No, yeah, this was a normal play. I mean, this would have been the spot to come back down to and try to risk off of, so. Either way, okay, let's go back to XL. Take a look at this one. XL looked nice. This was yesterday. Okay, so XL had a continuation from the previous day, which is nice. This is where, we got to draw on some support lines. So early morning, we're seeing this pop up, so maybe we saw it and we're like, okay, let's draw on some support if it gets to, or some resistance if it gets back above there. Maybe we want to see it come back down there. But a lot of the times it won't make it back down here. A lot of stocks can show strength off of the VWAP, so you want to somewhat have a buy in that level. Also, this could have been a support line as well. So a lot of the times you're not going to see it come back down to 9s, especially when there's a $0.50 mark like this and the stock does end up getting up to around 10s. You want to see it hold that 9.5. Either way, here's your first pops up. Now you're looking at the daily, looking for price targets. Really, 993 from 9.5 is a really good risk to reward when your stop is at 9.4, right? It's 5 to 1. Good risk to reward, so you could take profits through here below 10, or try at 10.5s, whatever it may be. But yeah, first dip buy came through right here. You saw it hold that VWAP. Maybe you're trying to risk 9.52s or so. Just see what it can kind of, if it can get back up there. Pops back up, gets up to 10.4s. Now you draw on your lower trend line, right? Maybe try to get a dip off of that level. Comes back down. Maybe you see these people that added dips down here, but it doesn't hold that. Breaks down, and now you get rid of this line. You really want to buy the first dip, especially in this market, because a lot of times it won't continue. Either way, this thing puts in a nice wedge, right? Nice wedge to the downside, kind of showing support through here. Gets down to VWAP, maybe bought some dips in here at the VWAP. And then I ended up buying, this would be a nice dip buy, but I ended up buying actually 10.03 before this broke out. My risk was 9.81, so I had 20 cents to the downside, and I had 50 cents to the upside. Not great risk reward, but ended up working out in my favor. The stock quickly climbed up and made previous highs, and I got out about 10.51, majority of my shares. I didn't wait for that reconsolidation. Actually left a few shares down here, but ended up stopping me out on that last candle that was bought up. So kept going, but it's been a shaky market, so that's that play. And then it got up to there, and then I had a death candle. So then at that point, after death candle, I'm not looking at the play for a little bit. I keep stocks on radar when they're not getting death candles, when they have relative volume. Maybe I don't see something yet, but I like to keep on watch. After that death candle happens, take them off watch. Okay, so now let's take a look at IO. That was the other one I was going to look at. IO is a failure from yesterday. I think it's good just to look at these and really try to see what's going on here. I tried to kind of make something out of this. I mean, it had okay volume in the morning, and then it popped up and got this massive candle, and it was good relative volume, and I was like, okay, well, let's see if we can add this dip. And so I think since it had popped up so quickly, we're looking more so for a momentum dip, and I think I tried off of this level, risked that line, and then it got stopped out again, and then this came down to VWAP, and then I tried again. This is a bad trade for me. Tried again off that, death candle pushed down through, and I think the biggest thing that kind of I didn't see that I should have seen is this candle was on a massive, like as much volume as the previous candle. So this should have came down slower and probably even not have gone below 2.9, but that death candle came through. I tried the dip, didn't get it. And then really the other problem was that this was a nice trend line, but it's not anywhere near support, right? Support is down here. The zone is down here. So you want to see the price try to get down here and then find support, and then it comes below VWAP, and then after it's below VWAP, and right here at this point, this might have been a nice try, but at this point it's already given back all of its uptrend, and it failed. So it was kind of a mix of the market failing, but also technically it wasn't a great trade. However, mainly the market failing, there's only so much you can do. When you see these things and you've seen them 100,000 times, it fails, that's okay, blah, blah, blah. And you stop out quickly. So, the cool thing about this stuff is that the fact that EO, right, for example, if I bought in here, my stop was 281 or 279, that's 2%. So now I'm out for 2% on IO. I might be out for 2% on Rice, right? Oops. What the fuck? Might be out for 2% on Rice, right? You get stopped out right here. I have a 2% stop loss. It stops me out. Now I'm down, say 4%. If I took those 2 trades in a row, however, you cannot let those things mess up your psyche. You cannot let that get to your mental and be like, oh, shoot, oh, I lost on a couple, blah blah. Well, the next stock's not gonna do that. No, each stock has to have a separate predisposition. You cannot have predispositions about stocks. You must take each one as their own. Otherwise, you'll get burned. The market doesn't care if your previous stock was a loss. You're not gonna go into the next trade and enter, and the market's gonna say, "Oh, Kai just took a loss" or whatever. So let's give him an easy trade. That's not how it works, you know. Um, it's just about being aware that around 50% of the time you're gonna lose on them, and that's just the way of the market. And 50% of the time you're going to win. So the only thing you can do to be profitable is to control that downside and allow your winners to run. And it's as simple as that. It's very hard for people mentally to get there and understand that and be calm with it. And once you can be, though, it's very enjoyable. You know, trading can be very enjoyable, very rewarding. Um, it teaches great lessons. And so the point I was getting at is that if we took these 2 losses on the day, we'd be down 4%, right? And then we go into the next trade. We're not worried about the 4% at all because we know that the winners are going to offset it. So now we go to XL, right? Maybe we see XL. Maybe we end up seeing XL up here at its wedge break, right? Maybe we already saw this come up, and now we want to see it hold previous highs right through here. And of course, this is a zone, so you want to see it just kind of hold that level, that area. So maybe you got some buys here, maybe you got some buys here. You get in at 989 to 10s, and that goes to 10.5. You just delivered a 5% profit. And with one trade, you've just offset both of these losers. See how that works? It's not like, which is exactly what you need, right? You need to be able to offset 2 losers with 1 winner. That's exactly what happened here. So now we can go to ODT. This was a really good one. Comparatively to what's been going on in the market, I actually marked it up. This was an ABCD break as well as a wedge break afterwards, which is nice. But when this thing came down, I saw it come down and keep pushing down on above average volume, and that's why you can't. It's kind of hard to say that was bad technical analysis on the last few, because like this has the same properties, ramping volume to the downside. You know, like I don't know, it's just choppy. But you still have to take these. So it comes down. B, find support, and you can buy off that support level, but you could have said that this was the support level and bought that, and it wouldn't have broken that, and then you would have gotten stopped out. So really for these, you want to be adding on C. B is the downtrend. You don't know when it's going to stop until it breaks this. So this is different than a wedge break, right? This is a downtrend. This is a wedge. This is a stock trying to break its downtrend. Can't do it. Finally find support down here, which is God knows where. I mean, I guess this is the little zone here. Pops out, tries to get above VWAP, doesn't make it, and then you get a nice little dip buy off of this level, which is also trend line from pre-market or beginning of the market, and it comes to that level, and now this is your dip buy C, because you know that this trend line, this downtrend for shorts is over, and shorts are going to be forced to cover through here if it doesn't continue. So it pops through. Now you've got some bullish sentiment to say, hey, it just broke this wedge. Let me try to see where I can add. It gives you this lovely dip buy to 409s, 410s, and then now your price target is going to be 46s. And in 3-4 candles, it reaches that level. Boom, trim, you're out. Obviously, other retailers sold here, and then it pops back up and goes all the way to 5s almost. And so that was the nice first trade. this is what you want to see in a regular market, is where you can trim half here and it finds support and then moves higher. That's what you want to see in a good market. Anyways, gets up to about 4.9s and then can't break this level, tries to, sellers come in kind of pushing it down. Someone's up there selling their shares, and so it tries. You can see the volume through here. It's trying. Million volume per candle on some of these, and that's really good. And then comes back down, couldn't break, and then forms kind of this little wedge. And right here would have actually been a nice buy off this level. And then can't really find support there, comes down, and at this point now, look, if you look left, it's found this trend line. And now it's going to be a dip buy on that trend line and VWAP. So now you want to see it hold 4.5s, pushes back up on that hammer. Nice sign, you always want to see a hammer. And then now you're in at 4.55s off of this lower trend line if you're trying to risk it. And then boom, pops up and hits 4.95 again from 4.5s. So, and then your trim is about 4.89. So you've made about 40 cents. What is that? 40 cents, 50 cents, right? So you've almost made $1 off this move. I mean, that is insane. That's almost 15-20% off that. And this is a regular trade. This isn't a shitty market that this just happened. So if you capitalize on either of these, you just made 10 to 15%. You also made 5% on that other one, so you're up 20%, and you're down only 4%. So that's what I mean by take every single trade, right? Take all of these trades. You got to take this one. You also have to take the rice trade, right? You got to take that because there's a good chance that this keeps going, right? And if you don't, if you hadn't taken the ODT trade, then that 4% is going to look a lot more hefty. If you hadn't taken this, now you're only offsetting your stuff. You're not profitable. You're just offsetted those losses with the XL if you hadn't taken this trade, because you thought maybe, like I was saying earlier, is that it was bad technical analysis, but really we see this ramping volume, right, to the downside. But it still recovers and turns around and does exactly that to the opposite side. So in reality, never change your strategy if it works. Only adapt. When you go through a drawdown, you don't second guess your strategy. The market simply just doesn't agree with your trade that day. Let's say you're trading at a firm, and you own the firm, and you've got tons of people working for you below you, and all of a sudden you have a week, maybe a few days, maybe a week, maybe a month, where your strategy is not working. Are you going to panic and tell everyone, oh, we got to relearn, we got to look at this new strategy, we got to figure something else out? No, you simply say that the market's not working right now for your strategy. And it's much easier to say this once that the strategy works for the majority of the year, because then you're just going to stick with that. It's hard for people that haven't experienced it to understand it, if that makes sense. So going into tomorrow, we're gonna probably try to get some sleep tomorrow. Not expect hardly anything from the market, but you never know. And really just respect your strategy, be there with your strategy, and understand that sometimes the market can deliver some serious hits. So